Imagine waking up on a random Wednesday morning. You check your investment accounts like you sometimes do with your morning coffee, and you notice something strange. Yesterday, while you were at work putting in your 8 hours, your portfolio generated $412 in gains. You do some quick mental math. After taxes, your take-home pay for that same day of work was about $320. Your money made more yesterday than you did, and then it hits you. This isn't a fluke. This is happening more and more frequently. Your investment returns are starting to consistently outpace your salary. You could theoretically not show up to work tomorrow, and you'd still be making money. Not enough to live on yet, but the lines are crossing. Your money is starting to work harder than you do. This moment has a name. It's called the crossover point. Most people will work for 40 years and never even know this moment exists, let alone experience it. They'll trade their time for money until they're 65, then hope Social Security and whatever they've managed to scrape together is enough to survive. But there is another path, a mathematical inevitability that, once you understand it, changes how you see every dollar you earn and every dollar you spend. We aren't talking about budgeting apps or how to save $5 on a latte. We are talking about the specific date on the calendar where you officially win the game of capitalism. The crossover point isn't a philosophy or a mindset hack. It's a specific, calculable milestone derived from the classic work Your Money or Your Life by Vicky Robin and Joe Dominguez. To understand it, you have to visualize 2 financial lines in your life that are constantly moving. The first line is your expenses, the cost of your rent, food, insurance, and lifestyle. For the average household, this is a relatively steady line. The second line is your investment income, the yield from your dividends, interest, and capital appreciation. When you start, that second line is at 0. You're in a state of total economic dependence. But as you invest, that line begins to curve upward. Because compound interest is an exponential function, the growth isn't linear. It's a curve that gets steeper and steeper the longer you stay in the game. The crossover point is the exact intersection where your passive income exceeds your cost of living. At that moment, work becomes optional. Let's look at the raw mechanics of why this happens. Most people view their income as a single stream, the paycheck. But the moment you buy your first share of an index fund or your first rental property, you are birthing a second income stream, one that doesn't require your physical presence. Initially, this employee is lazy, it makes you pennies. But as you reinvest those pennies, you are hiring more money employees. Eventually, you have a literal army of dollars working 24/7, 365 days a year, without ever taking a sick day or a vacation. The math behind this is governed by the 4% rule, or the safe withdrawal rate. To find your target, you take your annual expenses and multiply them by 25. If you need $50,000 a year to live, your crossover point is $1.25 million. While that sounds like a mountain, the secret is that you don't have to climb the whole mountain yourself. Compound interest carries you for the final third of the journey. Consider the psychological shift that occurs long before the lines actually touch. In the beginning, every dollar invested feels like a sacrifice. You are trading a tangible pizza or a new pair of shoes for a digital number on a screen. This is the valley of disappointment, where your efforts don't seem to match the results. But once your portfolio hits a certain critical mass, usually around the $100,000 mark, the engine starts to roar. A simple 1% market fluctuation now moves your net worth by $1,000. That is more than many people save in a month. This is the freedom gradient, where you realize that you are no longer just saving money, you are buying units of freedom. The tragedy of the modern worker is the treadmill effect. As income rises, expenses typically rise to meet them. This keeps the expense line high and the crossover point forever out of reach. We call this lifestyle creep. By keeping the expense line low while aggressively pushing the investment line up, you create a pincer movement on your financial or sovereign date. You are attacking the problem from both sides. Think about the math of a single $100 monthly expense. To cover that $100 bill with passive income, you need $30,000 invested, based on the 4% rule. We often hear that the stock market is a gamble, but over a 20-year horizon, the S&P 500 has never had a negative return. The real gamble is relying on a single source of income, your ability to perform labor, for 40 years. Your labor is a depreciating asset. You get older, your health may decline, and your skills may become obsolete. Capital, however, is an appreciating asset. By converting your labor into capital as early as possible, you are trading a fragile resource for a robust one. This transition from worker to owner is the core mission here at Mastering Money and Wealth. It's about recognizing that the economic system we live in is designed to keep you on the treadmill, but the exit ramp is built into the math itself. The system doesn't require you to be a genius or a lucky entrepreneur. It only requires you to be a disciplined accumulator. As you begin to track these lines, you'll notice that the gap between your income and your expenses, your savings rate, is the primary engine of your freedom. When you start to see your life through the lens of the crossover point, the Monday morning blues take on a different flavor. You aren't just working for a boss, you are working to fund the final few bricks of your fortress. Every hour of overtime is another day of your life you've reclaimed from the future. You are literally buying your life back, one share at a time. This is the invisible milestone that separates the wealthy from the merely high-earning. One group has a high standard of living, but the other group has a high standard of life. The beauty of this mathematical certainty is that it doesn't care about your background, your education, or your job title. It only cares about the math. If you can widen the gap and fill that gap with productive assets, the crossover point becomes an appointment on your calendar rather than a dream in your head. And as that date approaches, the gravity of your wealth starts to pull the crossover point toward you. To truly master the mechanics of the crossover point, we have to dismantle the biggest myth in modern finance: the idea that wealth is built through big wins. In reality, the crossover point is reached through the aggregation of marginal gains. This is a concept used by elite athletes to improve by 1% in every area, which eventually leads to a massive cumulative advantage. In your financial life, this means understanding that the path to $1.2 million isn't usually a straight shot from a lottery ticket or a lucky stock pick. It's the result of optimizing the two variables we discussed: the height of your expense line and the velocity of your investment line. Let's talk about the velocity of that investment curve. Most people look at an 8% return and think, that's not enough to make me rich, but they are looking at it in a vacuum. When you reinvest your dividends and capital gains, you are engaging in geometric growth. This means your money isn't just growing on your initial principal, it's growing on the growth. This is why the final 5 years of your journey to the crossover point will often generate more wealth than the first 20 years combined. But velocity is often throttled by something invisible: taxes and fees. If you are investing in a standard brokerage account, you are being taxed on dividends and capital gains along the way. This is like trying to run a race with a parachute open behind you. By utilizing tax-advantaged accounts like a 401k, an IRA, or an HSA, you effectively cut the strings to that parachute. You allow the full weight of your money to compound without the government taking a haircut every year. Over a 30-year period, the difference between a tax-sheltered portfolio and a taxable one can be the difference between hitting your crossover point at age 50 or age 60. Now, let's address the expense line with more surgical precision. Most financial advice tells you to cut back, which sounds like deprivation. At Mastering Money and Wealth, we prefer to look at it as value optimization. Every dollar on your expense line should be auditioning for its place in your life. We categorize expenses into two groups: high utility and vampire costs. High utility expenses are things that truly enhance your well-being: a comfortable home, nutritious food, or experiences with loved ones. Vampire costs are the leakages: the high-interest car loan for a vehicle that depreciating in the driveway, the unused gym membership, the premium cable package you don't watch, or the convenience fees from ordering delivery every night. When you kill a vampire cost, your lifestyle doesn't actually change, but your crossover point moves years closer. One of the most powerful tools to crush the expense line is a concept called front-loading. Most people spend their 20s and 30s leveling up their lifestyle as their career progresses. They get a raise, they buy a nicer car. They get a promotion, they move into a bigger apartment. This is the trap. If you can front-load your sacrifices, meaning you live like a college student for the first 5 years of your career while your income is rising, you can shove a massive amount of capital into the market early on. Because of the exponential nature of the curve, $50,000 invested at age 25 is worth significantly more than $150,000 invested at age 45. Real estate, in particular, can act as a crossover shortcut. Because of leverage, using the bank's money to buy an asset, you can often generate a higher cash-on-cash return than the stock market. If you buy a rental property that nets you $500 a month in profit, you have just moved your investment line up by $6,000 a year. To do that in the stock market using the 4% rule, you would need $150,000 in cash. If you bought that property with a $30,000 down payment, you effectively reached that $150,000 milestone 5 times faster. However, regardless of the asset class you choose, the underlying math remains the same. You are converting your life energy, which is finite, into capital, which is infinite. Every hour you spend working is a trade. You are trading a piece of your life for a piece of paper. If you spend that paper on a depreciating asset, that life energy is gone forever. If you spend it on an appreciating asset, that life energy is preserved and will eventually start to breathe on its own, producing more energy for you. This is the owner mindset. A worker sees a $100 bill and thinks about what it can buy. An owner sees a $100 bill and thinks about what it can earn. Once you make this mental flip, you realize that your true cost of living isn't the number on your credit card statement. It is the number of years you have to remain a worker to support your habits. As we look toward the final stretch of the journey, we have to prepare for the final boss of the crossover point: inflation. Over the last 100 years, inflation has averaged about 3% per year. This means your expense line isn't actually flat, it's slowly drifting upward. This is why we use the 4% safe withdrawal rate. It's designed to allow you to increase your withdrawals by the rate of inflation every year without running out of money. It's a weatherproof math formula. The crossover point isn't just about escaping a job. It's about claiming your seat at the table of the investor class. For centuries, the world has been divided into those who work for money and those whose money works for them. For the first time in human history, through low-cost index funds and the democratization of information, the average person has a clear, documented path to switch sides. As you enter the final stretch toward the crossover point, the game shifts from a marathon of discipline to a masterclass in psychology. This is the stage where most people experience one more year syndrome. Even when the math clearly shows the lines have crossed, when your investments are officially generating more than you spend, a primal fear often takes over. You've spent 20 or 30 years defined by your utility as a worker, and the idea of letting go of that safety net feels like jumping out of a plane. But this is exactly why we track the numbers so meticulously here at Mastering Money and Wealth. Because the math does not have emotions, the math is your objective truth. To bridge this final gap, you need to understand the concept of the margin of safety. In engineering, a bridge isn't built to hold the exact weight of the cars expected to cross it. It's built to hold 5 times that weight. Your crossover point should be treated with the same respect. If your math says you need $1.2 million, hitting exactly $1,200,001 might feel a bit tight. This is where you build your cash buffer. Most successful crossovers investors keep 1 to 2 years of living expenses in a high-yield savings account or a money market fund. This serves as a shock absorber. If the market crashes the day after you stop working, you don't have to sell your stocks at a loss. You simply live off your cash buffer and wait for the investment line to recover. But let's look beyond the bank account. What actually happens to a person when they reach true sovereignty? The most profound change isn't the ability to sleep in. It's the total reclamation of your cognitive surplus. Think about how much of your brain is currently occupied by work-related stress, commute logistics, and office politics. When you hit the crossover point, that mental energy is returned to you. This is why people who retired early often end up becoming more productive than they were when they had a job. They start businesses, they volunteer, they write books, and they solve problems, not because they have to, but because they want to. This is the hidden secret of the crossover point, It's not the end of work, it's the beginning of unconditional work. It's the work you would do for free because you believe in it. And ironically, because you no longer need the money, you often become much better at whatever you choose to do. You can take risks that a dependent person never could. You can tell the truth when others have to stay quiet to protect their paycheck. You become a more authentic version of yourself. However, we must address the invisible risks of the post-crossover life. The biggest one isn't a market crash. It's a loss of purpose. We are hardwired to contribute. If your only goal is to reach the crossover point so you can sit on a beach and drink margaritas, you will likely be miserable within 6 months. The crossover point is a reset button for your life's mission. It's the moment you stop asking, "How do I survive?" and start asking, "What do I want to build?" If you're rewatching this and you feel like you still at the very beginning, standing at the bottom of the mountain looking up at a $1 million target, remember that every mountain is just a collection of small rocks. Your job isn't to move the mountain today. Your job is to move one rock. Every time you choose an index fund over a luxury dinner, you are moving a rock. Every time you negotiate a higher salary and keep your expenses the same, you are moving a rock. The treadmill of modern life is designed to keep you moving, but never arriving. It is fueled by the comparison trap, the need to have the same house and the same car as people who are also stuck on the treadmill. But the moment you decide that time is more valuable than stuff, you've already won. You've opted out of the rat race before the race is even over. Let's get practical about your next 24 hours. I want you to perform a sovereignty audit. Look at your bank statement from the last 30 days. Don't look at the prices. Look at the time cost. If you spent $200 on a night out and you earn $25 an hour after taxes, that night cost you 8 hours of your life. Was it worth a full day of sitting in a cubicle? Sometimes the answer is yes. But more often than not, when you see the price tag in hours of life remaining, your perspective shifts. The crossover point is the moment that time cost drops to zero. It is the moment where your life is finally 100% yours. It is the date on the calendar where you stop being an employee of the economy and start being a shareholder of the economy. At Mastering Money and Wealth, we believe this isn't just a financial goal, it's a moral imperative. In an age of uncertainty, the greatest gift you can give yourself and your family is the gift of options. The crossover point is the ultimate option. It means that if the world changes, if your industry is disrupted by AI, or if you simply decide you want to move to a cabin in the woods, you can. You are no longer a hostage to a specialized skill set or a specific location. Most people will spend their entire lives afraid of the boss, afraid of the economy, afraid of the future. But math is the cure for fear. When you know exactly what your freedom number is, and you see that investment line creeping up year after year, the fear starts to dissolve. It's replaced by a quiet, steady confidence. You realize that you aren't just surviving, you are winning. As we wrap this up, I want you to take a moment to visualize that random Tuesday again. But this time, don't just imagine checking the account. Imagine the feeling in your chest when you realize you don't have to do anything today. The sun is up, the coffee is hot, and your army of money employees is already out there in the world, working hard, earning dividends, and growing your empire while you sit on your porch. That feeling isn't reserved for the 1%. It's reserved for the disciplined. The lines are moving, the math is working. The only question is, will you stay in the game long enough to see them cross? If this deep dive into the crossover point shifted your perspective, make sure to hit that subscribe button and join our community here at Mastering Money and Wealth. We are dedicated to the math of freedom and the psychology of true sovereignty. Turn on those notifications so you don't miss our next breakdown of the invisible milestones that actually matter.